On 1st of February 2024, Finance Minister Mrs. Nirmala Sitharaman announced that the government shall pursue the path towards fiscal consolidation and reduce the fiscal deficit to 5.1%. Subsequently, we saw or we heard that the bonds yield, it declined to 9 points or 9 basis points, that for 10-year treasury bond. 14-year treasury bond, it declined to 12 points. And we also saw that the Sensex, it rose by 612 points, 612 basis points. So let us understand, what are these treasury bonds? A 10-year midterm treasury bond. What is bond yield? And what is and how does the Sensex respond to it? In the financial year 2024-25, the government announced that in its path towards fiscal consolidation, it would be issuing the government bonds lesser than what it issued the previous year. That is, in 2023-24, the government had issued bonds worth rupees 15.43 lakh crore. But this year, the government declared that it will be issuing bonds worth rupees 14.13 lakh crore. Now, this decision of the government of issuing lesser bonds, it had its impact on the bond yield. So let us understand what is bond yield. So when we are talking about the bond, this is a government bond which is called as a treasury bond, and these treasury bonds are for various time periods. They could be for 10 years, they could be for 14 years, they could be for 30 years. And these bonds, they usually come with a coupon rate. So the coupon rate could be for, let us say, a 10,000 rupee bond can have a coupon rate of 800, 900, 1,000. The coupon rate generally remains constant. So when we are talking about the bond, we see that there is a bond price and then there is a coupon rate. So let us say the bond price is worth 10,000 and then there is a coupon rate of 1,000 rupee per annum. This is a hypothetical example. So in this scenario, the bond yield is understood as coupon rate divided by the bond price. So here it will be the coupon rate is 1,000 divided by bond price, which is 10,000. Now look at what was the impact of the budgetary statement. The moment the finance minister announced that the government would be issuing lesser number of treasury bonds, it led to an increase in the demand of the bonds. And this led to an increase in the bond price. See what happens, what exactly is the bond price? Now, because the government is selling lesser value of bonds, there would be a greater demand for the bonds, and then the 10,000 rupee bond might be sold at premium in the market for 11,000 or 12,000. And when the bond price increases, it leads to a reduction in the bond yield, and vice versa. So if the government would have announced a greater issuing of bonds in this budget, it would have led to a decline in the bond price and subsequent increase in the bond yield. So when we are talking about bond yield, it plays a very important role in the correlation or in understanding the capital markets. So with the finance minister announcing issuing lesser value of treasury bonds, the bond yield for 10 years declined by 9 basis points, and that of 14-year declined by 12 basis points. And subsequently, the investors, rather than investing in the bonds, invested or diverted their funds to the Sensex and Nifty, which gained by the subsequent rise. So 612 basis points was the gain that Sensex reported. So in this manner, the budgetary provision or the budget or the government's policy or the government's fiscal contraction or stimulus impacts the capital markets or investors. Similarly, we also have monetary policy. For example, we can consider the United States of America. In US, in December 2023, the Fed Reserve had announced that in the coming year, that is the present 2024, the Fed Reserve would be cutting interest rates. Interest rates and the bond prices, they have inverse relationship. The moment the investors speculated cutting down of interest rates in America, we saw that there was a rise of bond price, and subsequently the bond yield declined in US. So the Fed Reserve's policy of interest rate reduction, it led to a decline of bond yield, and we saw the American markets soaring high in January. The S&P 500, NVDIA, it reported a historic high. And we saw S&P 500 also gaining significant rise. So in this way, we see that the budgetary policy, monetary policy of the central bank, it impacts the market via bond yields. Markets are very complex. This generalist understanding of the market is not sufficient, as there are various factors which influence the way a market behaves. However, we understand that the policies of the government, the policies of the central bank, whether it is fiscal consolidation, fiscal stimulus, whether it's expansionary or contractionary monetary policy, they have a significant bearing on the markets.